Copy Trade.
Welcome back, WeMasterTrade family. It's me, Eden here, and I'm beyond excited to be with you today for another incredible live session. So, whether you've been with us for a while or this is your first time joining, buckle up because we've got a jam-packed session full of insights, strategies, and the kind of tips that will take your trading game to a whole new level. So, are you ready to crush it today? So I love the energy already. We've got traders from all over the world, and it's awesome to see that everybody coming to share, learn and grow. So let's keep the momentum going because today's session is going to be next level. We've got some special guests who are here to share their stories and strategies that will help them rise to the top of their game. So trust me, you don't want to miss a single word. So first up, I have the honours of introducing Helen, an absolute beast in the Forex market. So Helen's been mastering Forex trading for over 2.5 years, and she's here to share some seriously valuable insight with all of you. So Helen, how's it going today?
Hey Aiden, I'm very excited to be here. It's a wonderful trading day with the WeMasterTrade community. This kind of a simple approach. I really adore this. I'm going to delve into some of the strategies in the foreign market.
So I love that energy, Helen, and I know the audience is bound to hear all about your Forex journey. But before we get into that, let's not forget about our next guest, Ralph. So Ralph's been dominating the fund trading scenes, especially in the high-stake world of crypto and stocks. So Ralph, how's it going?
Hey Eden, I'm equally excited to be here. This session will offer fresh topics for discussions, and today I'm thrilled to share some of the strategies that have been effective for me in fund trading. It's going to be an engaging section.
So that we'd love to hear, so for everybody watching, make sure you've got your notepad ready because Helen and Scarlett are about to drop some serious knowledge bombs, and we'll be diving deep into their experiences, challenges, and the strategies that will help them thrive in the fast-paced world of trading. Alright, so Helen, it kicks things up with you. You've been trading Forex for over 1.5 years now. And I know that the Forex market can be a bit of a roller coaster. So can you tell us how you got your start in Forex trading and what led you to choose WeMasterTrade as your platform?
Certainly, Aiden, I began forex trading about 2 years ago. What captivated me initially was the market vibrancy and proprietary activity. The forex market is exceptionally dynamic. I was attracted to the concept that there is always potential for success regardless of the circumstances. When I first discovered the WeMasterTrade, it immediately resonated with me at the perfect mark. The resources they provide, including the sophisticated technical analysis and access to the real-time data, truly impressed me. However, it was the community aspect that clinched it for me. WeMasterTrade plays a strong emphasis on adding trader success by offering essential tools and support to advance regardless of your starting point.
So that's fantastic, Alan. It sounds like WeMasterTrade is really help you evaluate your game. Now Forex is known for its volatility and sometimes it can make or break a trader. So how do you handle the ups and downs of the market without letting the passion get to you?
Great question. Volatility can be challenging, but it's also where the real opportunities are. The key is have a solid risk management plan. I always say you have to respect the risk. It's important to stay disciplined, and WeMasterTrade risk management tool help me do that. Their real-time alert and customizable risk parameter allow me to react quickly but with control. When the market moves fast, you have to stay calm, trust your strategy, and not let emotion take over. And for me, that's where the WeMasterTrade feature really shine.
So you get some valuable insights, Alan. Managing risk and staying cool under pressure is definitely key in forex trading. Now, let's switch gears to fund trading. So you've been crushing it for nearly 2 years, specializing in long-term strategy. So can you, tell us what drew you to fund trading and how it differs from other forms of trading?
Absolutely, Aiden. Fund trading revolves around strategic long-term growth. It's not about seeking quick wins, but constructing a portfolio that can steadily advance over time. What truly distinguishes fund trading is the need to consider both short-term and long-term perspective. Careful risk management is crucial, while simultaneously keeping an eye out for emerging opportunities. WeMasterTrade Real's data and analysis tools have been instrumental in achieving this balance. They enable me to make well-informed decisions that align with my long-term strategy, even when the market presents unexpected challenges.
So I love that. Fund trading definitely seems that it requires a lot of patience and foresight. So how do you stay focused on the bigger picture, especially when the market gets rocky?
Well, patience is paramount in fund trading. The market experiences fluctuation, but short-term ups and downs shouldn't dictate your long-term strategies. A crucial lesson I've learned is to maintain emotional detachment. Don't get overly excited when things are going well, and don't panic when the market dips. WeMasterTrade risk management tool assist me in staying disciplined even during volatility. I can set precise risk parameters and have peace of mind knowing that I'm not overexposed even when the market behaves unpredictably.
So such solid advice, keep your emotion in check is definitely a big part of being successful in trading. So you both have shared some secret gems so far, but let's talk about the tool that will help you get to where you are today. So Alan, can you share one specific feature in WeMasterTrade that's been a game changer for you in Forex?
Oh sure, a tool I absolutely rely on either account insight feature. It's over up to the minute data on how my account is performing, and I use it to observe patterns, evaluate my trades, and make better informed choices. Whether I'm pinpointing the best time to enter the markets or deciphering market trend, this tool gives me an edge. It enables me to spot opportunities that I might not have noticed otherwise.
So that sounds like a total game changer. Having a real-time insight is crucial, especially when you need to make quick decisions. So how about you? What's been your go-to tool in fund trading?
Well, for me, it's all about the risk management tools. They allow me to customize the amount of risk I'm willing to take on any trade. This has been key for me, especially in volatile markets like crypto. WeMasterTrade helps me stay disciplined and in control, ensuring that I never take on more risk than I'm comfortable with. That's what keeps me grounded, even when the market is going wide.
So risk management is really important, especially in today's fast-moving market. Whether you're Forex or fund trading, having the right tools makes a world of difference. So I hope that everybody's taking notes because Helen and Rob are about to drop some serious pro level insight today. So next up, traders, we are kicking things up a notch because it's time to dive into one of the most powerful features here at WeMasterTrade, the packet comparison. So whether you're a fresh paid newbie eager to get your feet wet or a seasoned pro looking to scout your strategies to new high, this section is for you because this is where you'll find perfect trading package to match your goals and take your trading from good to great. Okay, so at WeMasterTrade, we believe that there's no one size fits all in trading because every trader is indeed unique with different style, risk tolerance, and their own risk management. So that's why we actually offer multiple customizable packages to meet you exactly where you are in your trading journey. Is that you are aiming for high risk or high rewards, or you prefer the steady methodical approach? There's something here for you. And to break it all down, I've got the awesome Helen and Ralph, two of WeMasterTrade finance, and they will work closely with the packages and here to give us the insights on how to leverage each one to look for its potential. So next up, let's jump in with Helen, okay? So you've been with WeMasterTrade for a while now, and I believe you've seen firsthand how these packages can evaluate a trader experience. Can you kick things up by walking us through how both new and experienced traders can benefit from the packet comparison section, and why is it such a game-changing feature in the WeMasterTrade experience?
Absolutely, Aiden. I really enjoy discussing the packages because it's where the trader can truly customize their experience. The packet comparison feature simplifies the process for trader to understand precisely what they are getting. When you visit the website, there is a detailed comparative overview of each package that include information like the initial balance, profit target, daily lot limit, and more. All of the essential details are presented in a straightforward, easy to navigate table. It's all structured to assist trader in selecting the best tool for their success. Okay, let's talk about the standard package, one of the most popular options. This one is great for the trader who got some experience and are ready to level up. You start with an initial balance up to the $200,000, which gives you plenty of room to trade confidently and make strategic moves. The profit target is set at 6%, which I prefer for traders aiming to steady. And the later loss cap is 4%, so you got enough resting room to ride out market swing without stress too much. It's an awesome balance between opportunity and security.
So that sounds like a perfect stepping stone. The traders are looking to level up without jumping in too deep or too quickly. A 200,000k balance and a solid percent target give you a ton of flexibility to put momentum. But for those, I believe, looking for something a bit more thrilling. So let's talk about the 5, 10, and 10 piece. So package. So Helen, I hear that this one a favorite for a high risk, high reward trader. So what made the 5, 10, 10 such a standout?
The 5, 10, 10 packets, now we're talking a big play. Like the standard packet, you start with $200,000, but this packet is for the traders who are ready to take on bigger risk on bigger regard. The daily loss cap is 5%, giving you more flexibility in how you handle the markets. But here the kicker, the profit target jumped up to 10%. This is for traders who have confidence in their strategies and are looking to make their major gain. It's all about having a higher tolerance for risk in exchange for the bigger payout.
So now that's what I'm talking about, a 5% loss cap and a 10% profit target. That's definitely for traders who aren't afraid to go big and swing for the fences. But what if someone looking for something, simpler, without all the pressures of the specific profit targets? So Ralph, I heard about the 5-10-0 package, so can you break it down for us?
Absolutely, Aiden. The 5-10-0 package is ideal for traders who want a straightforward, no-nonsense approach. You start with a $100,000 balance, but here's the cool part, there's no profit target. You can trade freely without the stress of hitting specific percentages. It's just you, the market, and your strategies. The daily loss cap can stay at 5%, giving you some structures, but the beauty here is that it allows traders to focus on consistency without worrying about specific goals.
So that sounds a good dream for traders who just want to trade without all the restriction. Total freedom, no pressures, is you in the market. Now, Ralph, what about those traders who want a bit more control over the risk management but still want to play that high-stake arena? What can you tell us about the 5-10-10 no BC package?
The 5-10-10 no BC package is perfect for traders who want more control over their trade. You still get the $200,000 starting balance and the 5% die loss cap, but the flexibility is the real selling point here. This package allows you to tweak and adjust your trading parameters to match your style and risk management references. Whether you are reacting to market changes or want to experiment with different strategies, this package gives you the freedom to adapt without losing the safety net of risk management.
So flexibility and control in a volatile market. But too, and a lot of these packages are giving traders more ways to adapt and grow. So now we have covered a lot, but I've been hearing whisper about something really special, the custom packet. So Alan, tell us, what makes this one so exciting?
Okay, the custom package is waiting that's really exciting. This is for the trader who want its own full control, full customization, and a massive starting balance. You got a top profit of $400,000 initial balance. Yes, it is $400,000. But that's just the beginning. The reality is that you can customize everything, the daily loss limits, overall loss limits, and even your profit target. It's perfect for traders who know exactly what they're doing and want to grab a trading experience that matches their exact need. Is it the intimate in freedom and control?
So a 400,000 starting balance, ability to customize your entire trading experience. Oh, that's next level trading. So whether you're a risk taker or a methodical trader, the custom packet sounds like the ultimate playground for those who want to take their trading to the stratosphere. So let's just quickly recap for everybody here. So whether you're just getting started with the standard package or enjoying full freedom with the 5-10-0 or taking control with 5-10-10 no PC or customizing everything with a custom package, WeMasterTrade has a perfect option for you. So the only question is, which one is calling your name? So head over to the backup session section of our website right now and check it out for yourself, because we've got packages designed to fit you, every trader, no matter where you are in your trading journey. Let us know in the chat which package speak to you, and our team is ready to get started. The future of fund trading is in your hands, so let's make it happen. Okay, so next it's where magic is going to happen. We'll talk about packages and how you can jumpstart your trading journey with WeMasterTrade. But let's be real, success in trading isn't just about the package that you choose, it's also about understanding and sticking to the rules. The conditions that we have set here at WeMasterTrade are designed to not only keep you safe, but also help you grow and take the strategies to the next level. So the first one is arguably the daily loss limit. So Ralph, can you help me explain to everybody how this daily loss limit works and why it's so crucial for managing risk?
Absolutely, Aiden. The die loss limit is one of the most essential protections any trader can employ. It serves as a daily circuit breaker to prevent you from suffering significant losses on a challenging day. The concept is straightforward. There is a limit to how much you can lose in a single day of trading, and is determined by the greater true values, your account balance or your equity at the beginning of the day. Let me break it down with an example so everyone understands it clearly. Example number 1. Let's say you got a balance of $105,000, but due to some open trades, your equity, including floating profits and loss, is $107,000 at the start of the day. If you're working with a 4% die loss limit, that means you can lose up to $4,000. If your equity falls below $103,000, you are done trading for the day. And for the next example, on the flip side, if your balance is $100,000 and your equity is $99,000, the same 4% loss limit would mean your account would be liquidated if your equity dips below $96,000. The point is the daily loss limit is there to make sure a bad day doesn't wipe you out completely. It's about protecting your account and giving you the chance to regroup and come back stronger the next day.
So, it's like an insurance policy for your trading day. You hit that limit and boom, you're out before things get out of hand. But what happens if a trader accidentally crosses that line? Can they keep trading?
A great question, Aiden. No, if you break the daily loss limit, your account automatically liquidated. All your open position will be closed and you won't able to trade again, or unless you buy a new trading package. Here's the thing, this liquidation is automatic and immediate. It is designed that way to prevent further losses. And here a word of caution, market fluctuation can sometimes cause you to lose a bit more than the limit, depending on how fast the market is moving.
So it's a hot stop, definitely something traders should keep an eye on to avoid. And now that we have understand what the daily loss limit is and what happens when it hits, so the next question is how to avoid hitting the limit in the first place. So Ralph, you've been in the trading trenches for years, so can you share some practical strategy that traders can use to stay within the daily loss limit?
We all is. You got it, Aiden. Staying within the daily loss limit is about being disciplined and following a solid risk management plan. Here are a few key strategies that have worked wonderful for me and countless other traders. First, and I can't stress this enough, always use a stop loss. I know that it's some symbol, but it's absolutely critical. The stop loss ensures that if the market moving against you, you are out of the trade before things get out of hand. Think of it as your safety net.
So that's like saying up guardrails on a mountain road, right? It's there to stop you before you go off the cliff.
Exactly, Aiden. Is that extra layer of protection? Now the third strategy is position sizing. This is where a lot of traders leave off. You should never reach too much on a single trade. A good rule of thumb to reach no more than 1 to 2% of your account balance per trade. This way, even if the trade doesn't go your way, you're too far from hit your daily loss limit, and you can keep trading without any major setbacks.
So it's like building your defense. You don't put everything in one play, right? You spread out the risks, makes sense. But what about those moments when traders feel tempted to chase up to the losses? You know, trying to get it all back in one trade?
Oh, that's a big one, Aiden. Chasing losses is one of the biggest mistakes traders make, especially newer ones. This brings me to my third strategy: don't chase losses. If you have a third day, take a step back. The market will always be there tomorrow. If you start trading logic, trying to recover too quickly, it's easy to make emotional decisions that lead to even bigger losses. And before you know it, you hit that daily loss limit and you're out for the day.
So true, it's like trying to sprint when you're already winded. You're more likely to make a mistake. Now, Helen, these strategies sound spot on, but how do traders stay mentally strong when things aren't going their way? And what keeps them from falling into the emotional trap of chasing losses?
It's all about mindset, Aiden. Trading is just a mental game, as it is a number game. You got to stay calm and focused. One trick is always to have a trading plan before you even play your trade. That's why when the thing gets tough, you stick to the plan and avoid making impulsive moves. And if you find yourself get emotional, just stop, take a breath, step away from screen and reset your mindset.
So thank you, Helen, for those incredible tips on managing daily loss. And now let's shift our focus to another critical element of risk management: the maximum loss limit. So this limit is like your long-term safety net, ensuring that you don't deplete your account over time. So unlike the daily loss limit, which reset at the end of each day, the maximum loss limit is cumulative. So when you reach it, your account will be locked and your trades will be closed. So to dive deeper into this, let's discuss how the maximum loss limit works, how it's calculated, And why is essential for traders at every level, whether you're a new trader looking to minimize risk or an experienced trader scaling your strategy. This to ensure that you don't go beyond a point of no return. So Ralph, I know that you've got some great insights into the mechanics of the maximum loss limit. So could you walk us through how this rule works and what traders need to keep in mind as they plan their trading strategies?
Of course, then the maximum loss limit is a vital rule that's often overlooked but extremely important. Essentially, it's there to prevent traders from experiencing catastrophic losses by capping how much you can lose across the life of your trading account. So let's break it down. The maximum loss limit ensures your account equity never falls below 94% of its initial balance. So if you start with a balance of $50,000, your account will be closed once your equity falls to $47,000. That's a total allowable loss of $3,000. However, it's not all bad news. If you start making profits, the limit adapts, giving you more breathing room as your equity grows. For example, if your account balance increases to $52,000, you now make $2,000 in profit. Your new maximum loss limit would then allow you to lose up to $5,000 as you are essentially locking in those gains. The maximum loss limit acts as a long-term safeguard. It's designed not only to protect your account, but also to encourage disciplined trading by setting boundaries. The goal is to ensure you don't dig yourself into a hole that's too deep to recover from. So here are a few specific examples. Let's say your account balance starts at $50,000, but your equity drops to $49,000 due to some market losses. You are allowed to lose another $2,000 before your account hits that critical $47,000 threshold and is automatically closed. Now, if you are doing well and your equity rises to $51,000, you got some extra cushions. At this point, you are allowed to lose up to $4,000 before your account hits that same $47,000 limit. To figure out where you stand, the maximum loss limit is calculated by adding the sum of your closed positions and factoring in any open positions that are still running. Your trading dashboard will show two key metrics: max permitted loss, which is how much you are allowed to lose overall, and the remaining loss, which is the loss left before your account is closed. So now what happens if you hit that limit? Well, unfortunately, if your equity hits the maximum loss limit, the system will automatically close your account for the day. All your open positions will be liquidated, whether they are profitable or not, and you will be unable to trade for the rest of the day. To resume trading, you would need to purchase a new trading bucket.
So that definitely helps clarify the nuts and bolts of the maximum loss limit. So it's a safety buffer, isn't it? It's to keep you from spiraling out of control, especially when the market gets rocky. So now I imagine this will impact different traders in different way. So whether you are cautious traders looking to keep their bits low or a more aggressive trader trying to maximize profits, this is one of those things you can't afford to ignore. So let's bring in Ralph, a risk management expert. So what do you think are the mistakes traders make when it comes to managing the maximum loss limit? And more importantly, what strategy can traders implement to ensure they never get too close to it?
Great question, Simon. You are absolutely right. No matter what type of trader you are, ignoring the maximum loss limit can be costly. In fact, it's one of those things that sneak up on traders who aren't paying attention to the long-term pictures. And I would say the most common mistake is underestimating how quickly cumulative losses can add up over multiple trades. Here are some key strategies I recommend to stay well within your maximum loss limit. First of all, set stop loss order on every trade. This is your first line of defense. Setting a stop loss means you are deciding in advance how much you are willing to lose on a particular trade. The system will automatically close your trade if it hits that number, which protects you from letting a losing trade get out of hand. For example, if you're only willing to lose $500 on a particular trade, you set that as your stop loss and you won't have to worry about it spiraling.
So I love that. It's like putting a safety belt on each trade when you've looked and that stop loss is out of your hand.
Exactly, Aiden. It's all about discipline. The second one is manage your position sizing. This is a big one. Often traders, especially new ones, get carried away by putting too much capital into a single trade. But when you risk too much, you also risk losing a larger percentage of your account if the trade goes south. A good rule of thumb is to risk no more than 1 to 2% of your total account balance on any single trade. For example, if your account balance is $50,000, you should only risk around $500 to $1,000 per trade. This keeps your potential losses manageable and well within your limit.
So that makes total sense. You're not putting all your eggs in one basket, and it gives you more room to breathe, right?
Exactly, it's all about spreading the risk so you don't take too big of a hit on any one trade. The next one is monitor your account equity regularly. This might sound basic, but it's incredibly important to keep an eye on your account equity throughout the day. It's easy to get caught up in the market highs and lows, but you should always be aware of how close you are to the maximum loss limit. The dashboard makes it easy to check your remaining loss, so use it. If you see that you are getting close to the limit, it's time to take a step back and re-evaluate your strategies.
So it's almost like watching a few guys on, you don't want to be driving on fumes without knowing it.
Exactly, and no one wants to get stuck on the side of the road. So the next strategy is create and stick to a trading plan. Having a well-thought-out trading plan is one of the most powerful tools in a trader arsenal. This plan should outline not only your profit goal but also your risk management rule. For example, if you have a few losing trade in a row, does your plan tell you to take a breath, reset, or change your strategy? The idea is to have a reset series of rules so you don't make impulsive decisions in heat of the moment.
So it's like having a roadmap, right? You know where you're going, and you have the contingency plans for when things don't go as expected.
Exactly. The market can be unpredictable, but a solid plan keeps you grounded. For the next strategy, regularly review and adjust your strategy. Even the best plan needs to be reviewed and tweaked from time to time. If you find that you're approaching your maximum loss limit too often, it may be a sign that your risk management strategy needs adjusting. Maybe you need to tighten your stop losses or reduce your trade size. The key is to stay flexible and adapt to changing market conditions while always keeping your rate in check.
So that's great advice, Alan. It's all about constant improvement. You can't just settle and forget it. You've got to be ready to adjust based on your results and the market.
Absolutely, trading is dynamic and your strategy should be too.
Oh, thank you for the fantastic breakdown of the maximum loss limit, Ralph and Helen. So quickly said perfectly into our next case topic, the perfect consistency rule. So this rule is critical for ensuring long-term sustainable success in trading, as it helps measures and maintain consistency in your profit. So now to give us a clear picture of how the perfect consistency rule works and why is this important, let's turn to Ralph. Can you break down the rule for us, including how it is calculated, why it's so important for traders to focus on their consistency rather than just aiming for big wins?
Of course, the profit consistency rule is a powerful metric that helps you understand how stable your profits are over time. It's not just about making big gains on 1 or 2 days, it's about being consistent day in and day out. So here's how the profit consistency rule is calculated. You take your highest single day profit and divide it by the total of all your profits and losses over a given period, usually a month or a quarter. You then express that result as a percentage. Let's go through an example. Say your best day brought in $200 in profit, but over the month, your total profits and losses add up to $410. In that case, your profit consistency ratio would be around 48.7%. This ratio shows how much of your performance comes from one standout date. Ideally, you want the percentage to be lower, under 20%, because that means your profits are more evenly spread out across on your trading days. Now, why is this important? A low profit consistency ratio indicates that you are not just relying on a couple of big wins to stay profitable. Instead, you are showing that your strategy works consistently over time. Even on those days when the market isn't giving you big wins, this kind of consistency is the hallmark of a successful long-term trader.
So thank you, Rat, for such a fantastic breakdown of the perfect consistency rules. And next up, we are going to enter a short break. And after that, we're going to continue exploring the rules and other promotional plans that we are currently running.
Trade. Trade. copy trade.
MC cứng người.
Thằng nhỏ nó không tin. Okay, so welcome back everybody. So next up we are going to continue exploring the profit consistency rule. So Ralph, about your explanation, so just to clarify, a low ratio means that you're more likely to make steady gains rather than being overly dependent on a few good days, right?
Exactly, Aiden. When you are too reliant on just a few big wins, it often means that your strategy is risky or inconsistent. You could go through long stretches where you are not making much money or even losing it. But if your profit consistency ratio is low, it shows that your performance is smoother and that your trading is more predictable and stable over time.
So that's incredibly insightful, and it seems like a critical metric for any trader who's serious about long-term success, right?
Exactly. Consistency is the key to sustainable profitability. Big wins are great, but if they are followed by big losses or long periods or break-even trading, it's hard to maintain momentum. With the profit consistency rule, traders can keep an eye on how reliable their strategy is over time.
So now that we've got a solid understanding of what the profit consistency rule is, let's dig into some practical strategy to help traders maintain a ratio easily under 20%. So Helen, I know that you've got some great tips for us. So can you walk us through some techniques that traders can use to stay consistent and ensure their ratio stays in check?
Absolutely, Aiden. The profit consistency ratio is a powerful indicator, but it takes careful management to keep it low. So let's talk about some practical ways traders can improve their consistency and avoid becoming too dependent on the rare big win. One of the most effective strategies to keep your profit consistency ratio low is to diversify your trades. This means spreading your investment over different markets, asset classes, or even trading strategy. If you only trade one market, say forex or stock, you regard being too reliant on that market performance. By diversifying, you will reduce the impact of any single loss and create more stability in your overall performance.
Right, so it's not just about picking the right trades, it's also about making sure that you're not putting too much of your capital at risk on any single trade. So smaller, more controlled trades lead to steadier results over time, right?
Exactly, Aiden. It's all about balance. When one market isn't performing well, another market may be doing better. This way, your overall performance stays smoother and you're not relying on just one or two trades on pulling your through. Next up is position sizing. One of the biggest mistakes traders make is over leveraging. Taking on position that act to lack relative to their account balance. For example, if you have a $10,000 account, putting the 5,000 into a single trade is risky because if that trade goes out, you could lose a significant portion of your capital. Instead, aim to keep your position size small and manageable, say no more than 1 to 2% of your initial balance per trade. This reduces your risk and help ensure that losses don't overwhelm your profit.
So, smaller, more controlled trades lead to steadier results over time, right?
Exactly. By managing position sizing, you prevent any single trade from having too much impact on your overall performance. It's all about control and discipline. Another crucial element is having a well-defined trading plan. Without a plan, it's easy to get caught up in the emotion of trading, whether that's the excitement of a potential win or the panic of a sudden loss. A solid plan outlines exactly when you enter a trade, your assets, and how much risk you're willing to take. Having these rules in place keep you grounded and help ensure that your trading decisions are consistent, which in turn help keep your profit consistency ratio in check.
But that's a really good point. A lot of traders, especially new ones, probably jump into trades without a solid plan and end up making emotional decisions, right?
Absolutely, Aiden. It's so easy to get emotional in head of the moment. But if you have a plan, it's much easier to stay disciplined and avoid impulsive trades that could hurt your performance. This brings us to stop loss order. A stop loss is an automatic asset that you set up to close a trade if it moves against you. This has to cap your losses on any single trade and protect your account balance. By using a stop loss order, you can avoid the catastrophic losses that can throw up your profit consistency.
So I like the ideas of using stop loss orders. It sounds like a way to take the emotion out of the decision-making process.
Exactly, it's like setting up a safety net. Once your stop loss is in place, you don't have to worry about watching the trade 24/7. If things go south, the stop loss takes you out of the trades automatically, helping you stick to your plan and avoid large unexpected losses. Another important strategy is to regularly review your performance. Just because you've set up a solid plan and strategies doesn't mean you should put everything on autopilot. It's crucial to check your trades, see what's working, and make adjustments as needed. You might find that certain markets or strategies are delivering more consistent results than others. By keeping a close eye on your performance, you can tweak your approach and improve your consistency over time.
So it's like performing maintenance on your trading strategy, always looking for ways to optimize and improve.
Exactly, just like a car needs regularly tuned up, your trading plans does too. Continuous improvement is key to keeping your profit steady. Finally, and this is a big one, avoid emotional trading. Whether it's fear after a loss or overconfidence after wins, emotions can lead to poor decision making. If you stick to your strategies and avoid chasing losses or getting overly excited after a good day, you'll see much more consistent results.
So that's such an important point, staying calm and disciplined even when the market is going crazy. But it is easier said than done, right?
It's definitely take practice, but staying level-headed is crucial for long-term success. If you can control your emotions and stick to your plan, you will be far more likely to maintain consistent profits.
So next up, we are going to dive into another crucial aspect of effective trading, the risk consistency rule. So this rule is key to maintaining both stability and long-term profitability in your trading account. So I know that Raf, you've got a great way of explaining it. So can you walk us through, what the risk consistency rule is and why it's so important for traders to follow?
Sure thing, Adam. The risk consistency rule is all about ensuring that you manage your risk in a disciplined, consistent manner. It limits the risk per trade to no more than 2% of your initial account balance. This is really important because it prevents loss risk in your equities and helps mitigate the risk of significant losses due to sudden market movement or unexpected events. Let's break it down a little more. First of all, maximum risk per trade idea. You shouldn't risk more than 2% of your initial balance on any single trade idea. This includes any floating losses, so you need to factor in on potential exposures. The next one is trade idea definitions. Multiple trades on the same assets in the same directions are considered a single trade idea. On the other hand, trades on different assets or in opposite directions are treated as separate ideas. For example, if you open several positions on gold mine, they would count as one trade idea and the combined risk must remain under 2%. But if you have a gold buy and GBP sell, they are treated as two separate ideas, each with their own 2% risk limit. Following this rule smooth out your equity curve encourages disciplined trading and most importantly, reduces the chances of massive losses.
So thanks, Raf. That's definitely a really helpful overview. So now let me throw this back to our audience for a second because traders, have any of you ever found it tricky to stick to the risk consistency rule? How does it feel to have those limits in place and does it ever get in the way of your trading strategy?
Absolutely, I think the main points to remember about these risk consistency rules are first, risk per trade. Stick to risking no more than 2% of your initial account balance on any single trade. This keeps potential losses manageable and ensure you don't risk too much on any one trade. The next one, single trade. If you are over multiple trades on the same assets and in the same directions, they count as one trade, so your combined risk must stay within that 2%. The next one is separate trades. Trades on different assets or in different directions are considered separate ideas. Each of these can have its own 2% risk, but be mindful to keep track of them. So why does this matter? First, this stabilizes your equity curve by preventing huge swings in your account balance, and it's more discipline by encouraging traders to think more carefully about their risk. And lastly, most importantly, is reducing the risk of major losses and can really hurt your overall performance. So in short, adhering to this rule can keep your trading account safer and support long-term success.
So great, Raf. So now that I know that, so you might be wondering how to make sure that you actually stick to this rule. Well, let's switch gears and get into some practical strategies for making it easier to follow. Helen, could you share a few tips on how traders can stay disciplined and avoid breaking the risk consistency rule?
Of course, Aiden, sticking to the risk consistency rule takes some planning and discipline, but it's totally doable with the right strategy in play. Here are a few key tips. First and foremost, Clearly set your maximum risk per trade idea to stay within the 2% limit. You can use risk management tool or calculator to help with this. Most platforms have a built-in tool that allows you to automate risk limit.
So that's a good point. Having that automation takes a lot of the pressure off, right? No need to constantly double check. Your platform does a heavy lifting.
Exactly, it makes it so much easier to stick to your risk limits when the platform is handling the number for you. It's also important to keep track of the total risk across multiple trades on the same asset. For instance, if you open several positions on go buy, make sure the combined rate for all of trades doesn't exceed 2%. This is where traders sometimes leave out. They open multiple positions without realizing that combined their risk making more than they intended.
So even though the trades are technically separate, if they're on the same assets, you've got to look at them as one entity, right?
Exactly, Aiden. Treat them as one item because they are exposed to the same market movement. Speaking of the different trades, it's equally important to trade on different assets or in opposite direction as separate ideas. This way you can manage a trade risk individually without exceeding the 2% rule on any single trade.
So you could be running a gold buy and a GPY sales at the same time without violating a rule, as long as you manage the risk for each one separately.
Exactly. Just make sure you're keeping an eye on risk for each idea individually. I also recommend using risk management feature that many trading platforms offer, like automatic position sizing or stop loss order. These tools can help control your exposure and prevent you from overextending your risk.
So I imagine these tools will help prevent those moments where you're tempted to take on too much risk in the heat of the moment, right?
Absolutely, it takes the emotion out of the equation and help you stay disciplined. Lastly, make it a habit to regularly review your trading activity. This is something a lot of traders neglect. Reviewing your trades help ensure that your risk per trade idea remains within the set limit. And if you notice any pattern or area when you're taking on too much risk, you can adjust your strategy to stay compliant.
So it sounds like regular check-ins are crucial to spotting potential issues before they become bigger problems.
Exactly, Aiden. It's all about staying proactive.
So great tips, Helen. So now I think that covers it. Make sure that we're applying these risk management strategies and taking advantage of the new options available for account management. So thank you, Ralph and Helen, for your insight. So next up, we are going to walk you through our streamlined payout process. So at WeMasterTrade, we believe in making it easy for you, if possible, for you to access your hard-earned profits. So we offer various options for receiving your payouts, including bank transfer, PayPal, and cryptocurrency. So the choice is yours to ensuring flexibility and convenience.
Our payout process is both fast and secure. After you make a profit and met the payout requirements, you can simply log into your account, request a payout, and follow the on-screen instructions. Our team will process your request promptly, and in most cases, you can expect to receive your funds within 24 hours. It's that simple. And if you ever run into any issues or have questions about your payout, our customer service team is always here to help. You can reach us via live chat, email, or through our support ticket system on the website. We are committed to ensuring a smooth and hassle-free experience to all our traders.
So transparency is a key part of our philosophy. So that's why we're always here to answer any questions you might have about your account or the payout process. So just feel free to answer in the comments and we'll address your queries as we go. So next up, I would like to introduce you one of our very powerful tools, the financial instrument list, WeMasterTrade. So I hope that Alan could help us understand more about this.
Of course, welcome to the simple overview page of WeMasterTrade. Here you can explore a comprehensive list of financial instruments available for trading, including cryptocurrency, forex, stock, metal, energy, and indices. Our platform offers clients to the opportunity to trade with demo account using virtual funds, and we also utilize exclusive algorithm to copy your trade or to our live trading account. On this page, you will find detailed specification for a trading symbol, including the contract size, margin percentage, leverage option, and commission detail. It's important to note that due to the market fluctuation, some symbols may not always be available for trading.
Through our vision, it's a foster thriving community. As a legal professional trader, positioning WeMasterTrade.com as a go-to platform for anybody serious about advancing their career. So whether just getting started or you have years of experience under your belt, we are committed to providing the opportunities and resources that can help you succeed at every stage of your trading journey. So if you're ready to take your trading to the next level, you'll definitely want to stick around to hear about the exciting offers that we've got lined up, because the new promotional plans we'll be unveiling today is specifically designed to help traders maintain and get more of the experience here at WeMasterTrade. So we are focusing on creating more opportunities for growth, increased profitability, and long-term success. So, and right, for traders who are looking to ways to keep more of your profit, today we have an exciting update that will help you increase your earnings but without changing your trading style. It's all about posting your profit split by simply choosing the right funding package. So Alan will break it all down for you.
This new update is something that every trader should know about. When you put in the effort to grow your account, couldn't it be amazing to actually keep more of what you earn? Well, now with the new profit sharing route, that's exactly what's happening.
Absolutely, Helen. I know that's one of the most common frustrations in trading is feeling like your hard work isn't rewarded enough. But now with these partners profit sharing features, you can actually increase the percentage of profits you keep. It's a total game changer.
So let's get straight into the details here. How can you boost your profit split and earn more? So when you invest in an instant funding package with over $175, you've got 1% in bonus sharing and over $350 more 3% in bonus profit sharing, and over $500 you've got 5% lot plus in bonus profit sharing. So Alan, you help break this down in a real example.
Of course, let's take a look at the $500 funding package. Normally with an instant fund, you start with 50% profit share, meaning that for every 1,000 in profit you make, you get the 500. But with the no promotion, when you choose the package over the 500, your profit share jump up to the 50% to 55%. That means instead of you're taking home 500 from that 1,000 profit, you now keep the 150, 550, and why that might seem like a small change at first. Think about how much that's add up over time, especially for consistent trader. So in short, the bigger package and the bigger your profit share both.
Exactly, Helen, and traders. Here's why this is such a smart move. Let's say you are someone who trades consistently and make $5,000 in profits over time. With a standard 50% profit share, you would walk away with $2,500. But with the 55% boost, you will now keep $2,550. That's an extra $250 in your pocket for simply choosing the right package. And the best part, there's no extra effort required. You don't have to change your strategies or take unnecessary risks. All you need to do is select a higher funding bucket and you will instantly start earning more from the same trades.
So, some of you might be wondering, why is it such a big deal for traders? So let's hear Helen from this.
Great question, Aiden. As trader, our goal is always to maximize returns while minimizing risk. The best way to grow your account is to keep reinvesting your profits. But that's only possible if you're getting a bigger share of what you earn. With a higher profit share, you can scale up further, compound your earnings, and have more capital to work with for your next trade. Think about it, if you're keeping a larger percentage of your profits, you have more flexibility to diversify your trade and try new strategies, even withdraw more funds. This is especially important for those who want to trade for the long term. Over time, these more percentage increases add up to thousands of extra dollars. So if you're someone who takes trading seriously, this is a huge opportunity to level up your earnings.
That's such an important point, Helen. And from a psychological perspective, knowing that you're earning more per trade can actually help you stay disciplined and focused. Instead of overtrading or taking unnecessary risks to hit bigger profits, you can trade smarter because you are already keeping a bigger share of what you make. Plus, this isn't just about individual benefits. The more traders take advantage of this offer, the stronger our trading community becomes. More capital means better trading conditions, more opportunities, and a stronger ecosystem for everyone.
So, you've got a funding expert. This bundled profit sharing is your chance to increase your earnings without changing your trading style. All you need to do is to choose the right funding package and you instantly boost your profit split.
Yeah, this is an opportunity you don't want to miss. The market is all about making smart decisions, and this is one of the easiest ways to maximize your return. If you're serious about your trading journey, this is no-brainer. Don't wait too long because opportunities like this don't come every day.
So now we are going to talk about one of the hottest offers that we have available at WeMasterTrade right now, the WeMasterTrade BOGO event. So this isn't just a discount or a little perk, it's a game changer for traders looking to scale their accounts with zero extra cost. So do you have Kurt to break it down for us?
Absolutely, Aiden. The BOGO event, or buy one get one, is one of our most generous promotions to date. Here's how it works. You have for example, you buy a $175 account for hire. Guess you will get a free $10,000 instant account. When you buy a $340 account or higher, you will get a free $25,000 instant account. And lastly, if you buy a $650 account or higher, you will get a free $50,000 instant account. So essentially, when you purchase an eligible instant funding package, you are doubling your trading access without spending an extra cent.
And let's be real, that second account can do so much for you. Maybe you want to try a different strategy. Maybe you want to split your trades between conservative and aggressive setup. Or maybe you just want to stay tuned in case once of your account hits drawdown. Either way, you now have more capital, more flexibility, and more opportunity.
So I love that, and this isn't just a promo that makes you jump around hoops, right? The gold account is going to be issued after qualifying purchase. Isn't that right, Ralph?
That's right. Once your purchase is confirmed, our system automatically issues your bonus account. No hidden step, no waiting periods. It's quick, seamless, and incredibly trader-friendly.
And here the cool part. WeMasterTrade allow you to combine BOGO account up to the 200,000 in total funded capital. That means if you are a serial trader looking to scale, you can stretch the account to trade even larger.
So, But let's go into talk about terms, so there's a few rules to keep things fair and balanced, right?
Oh, right. So here, what you need to know is BOGO account allow one payout after you claim your first profit that's called e-commerce, or only one active BOGO promotions per trader at a time. When you complete your BOGO fee, you're eligible for a new one. The BOGO account must adhere to the same trading rules as standard instant funding account. That means daily loss, maximum loss limit, and profit targets still apply.
So how do you make the most of it? Well, you could use your main account for your try and true strategies and the BOGO account to experiment with something new. Try gold scalping, news breakout trading, or running an EA on one and manual trading on the other. You got options, and that's what this promotion is all about.
You can also use it to compare your emotional trading on one account with a more rules-based approach on the other. This creates a controlled environment for skill development. It's ideal for traders who are looking to become more consistent and take risk model and under real-time funded conditions.
So to recap, with the BOGO event, you get an additional funded account for free instantly with the potential scale all the way up to 200,000. You diversify, test, trade smarter, and profit more, all while WeMasterTrade cover the risk.
And if you're just starting out, it's the perfect way to get two chances to success instead of one. You gotta require your discipline, test consistent, and understand the platform better, which try the experience and your additional cost.
Exactly, we designed the BOGO promo with growth in mind, not just profits, but development. It's a tool for building skill, scaling accounts, and increasing opportunity for every kind of trader.
And remember, the BOGO event is only available for a limited time, so don't miss the window to multiply your opportunities. Whether you're trading full-time or still learning about, this is the offer that lets you move forward with confidence. So, thank you, Helen and Ralph, for those incredible insights. It's clear these formations are tailored to provide maximum benefits, whether you're a novice or a seasoned trader. At WeMasterTrade, we are committed to supporting our traders at every stage of their journey. So remember, everybody, these offers are currently available, but they won't last forever. So make sure to take advantage of them while you still can. And if you have any questions about these packages or need further assistance, our customer service team is always here for help. Just reach out and we'll guide you through the process. So before we move on to the next segment, I want to remind everybody to engage with us in the comments. Let us know which promotions you're most excited or any question you might have about our offering. We're here to help and make sure you have all the information you need to make informed trading decisions. So next up, we are going to enter the economic analysis of today. So can Ralph help me with this?
Alright, now let's get back to my screen. So for the news calendar, this day is even heavy, particularly for USD and Euro traders. A combination of monetary policy decisions, employment data, CBI reports, and central bank speeches make this a potentially volatile session with high strategic importance. The first event is Fed Chair Powell speak. When the Federal Reserve Chair speaks, it's a market moving event. Powell's comments are closely scrutinizing for forward guidance on interest rate, quantitative tightening, and economy assessments. With recent data showing mixed inflation and employment trends, traders will focus on whether Powell maintains a hawkish or dovish tone. Markets are currently pricing in a potential rate cut in the coming quarter if economic cooling continues. Any deviation from expectation could trigger volatility in the US dollar, treasury, and equities. For the market implications, hawkish tone, strong USD, weaker equities, rising bond yields. downturn, weaker USD, bullish equity, falling yields. Volatility expected in USD pairs, especially Euro USD, USD Japanese yens, gold, and S&P futures. For the next event, the unemployment claim. The analysis, the number came in slightly above forecast, suggesting a slightly cooling labor market. While not alarming, it may reinforce the Fed's view that high labor conditions are easing, which align with a less aggressive stand on further rate hikes. For the implications, short-term monthly periods for USD, medium-term support the narrative that monetary tightening has peaked. For the market reactions, interest rate sensitive sectors like tech may benefit, bond yields may decline. The next event is Philly Fed Manufacturing Index. For the interpretations, a sharp drop in manufacturing sentiment in the Philadelphia region suggests deteriorating business confidence, potentially due to higher borrowing costs, declining orders, or geopolitical uncertainties. For implications, pairs for USD suggest weaker economic activity in the manufacturing sector, negative for industrial stock and suppliers, important for economists monitoring regional Fed indicators to assess national trends. About the New Zealand events, first of all, inflation came in above expectations, showing that price pressure remains persistent in the New Zealand economy. This will complicate the Reserve Bank of New Zealand's decisions, potentially pushing back rate cut expectations. About the impact on markets, bullish for New Zealand dollar, higher inflation equal to higher interest rate expectations. Periods for New Zealand bonds, inflation erodes real yields, and the RBNZ may stay hawkish, diverging from other central bank easing. And the next event, Helen, please help me with this.
Okay, so for the next events, employment trends, the job market rebounded positively after a sharp drop in the previous period. Even though it fell slightly short of expectation, the unemployment rate came in better than expected, signaling underlying strength in the labor demand. For the implications, message were generally supportive for AUD. Shortfall in employment trends tempered enthusiasm. 4.1% unemployment is still historically low. RBA may hold rate steady. For the investor forecast, AUD USD could see more moderate appreciation. Trader will watch forward indicator like wage growth job as economic will factor in this figure for GDP projection. For the next events and Euro zones, main refinancing rate. This confirmed just rate cuts by the European Central Bank, the major policy pivot after a long cycle of tightening. The cut suggests the ECB see disinflationary ratio and slowing growth. For the implications, various for EU are across the board, positive for Eurozone equity, lower borrowing costs, support growth outlook for remainder of the 2025. Cuts from other central banks like SNB, BOE to follow suit. To next event, monetary policy statement accompany the rate decision and elaborate on the ECB's view, key term, outlook for inflation, growth expectation, future balance sheet action. Third, in part, if ECB signal more cuts, further pressure on EUR. It's a one and done tone, EUR may recover short term. And the last one, in ECB press conference, Christine Lagarde's tone will heavily impact EUR volatility. Trader will analyze forward guidance on inflation targets, discussion on QT tapering or bond reinvestment react to the external risks like energy price, geopolitical risk. For the market sensitivity, high EUR USD, EUR JYP Jack, European bond will all respond within minutes. Forex desk, hedge fund and macro fund will be watching closely. That's all the news for today.
Thank you, Helen and Rob, for the detailed analysis of today's economic calendar. And thank you all to our audience for joining us today, because we hope that this session has been informative and that as you are as excited about the opportunities here at WeMasterTrade as we are. So remember to like, subscribe and share the live stream with others who might benefit from it. And don't forget to follow us on our social media platforms for more updates, promotions, and trading tips. Oh, especially is our X platform. So stay tuned for our upcoming events, and we look forward to seeing you again soon. So until next time, happy trading.
Trade.